Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Oh, there we go. That thing. Hey, good morning, everyone. There you go. Hello, welcome along. Good to see you. Few of the early birds up and at it, which is awesome. Sharon, good morning to you. How you doing? Hope you're well. Good to see you, Facebook user. Hiding behind the veil of maybe a private group in one of the groups. Hey, welcome along. Good to see you. Awesome to have you here, folks, on a terrific Tuesday. Had a little bit of something that I got up to during the week, which was kind of cool. Hung out with some property investors, some business owners, some entrepreneurs. Friday, Saturday, Sunday, we did a big deep dive on wealth, creating wealth, and that was pretty cool up in Brisbane. If any of you were hanging around or were there, awesome to have you. If you didn't, you missed out. I'm telling you, you missed out. Shelley was there. Good to see you, Shelley. Back at it this morning, folks. While things are warming up, I'll do the little intros and bits and pieces while things are getting going. Jason, what's my name? Most of you know that already, though. But if by some happenstance you are new, wandering by, saying hello, let us know in the chat. Give us a shout out. Let us know where you're coming in from. Good to see you, Jeff. Thanks for joining us last night for mentoring. As always, mate, good to have you there and hanging out and doing the do. What do we do each morning? 10 past 8. Well, as many mornings as we can. The last few weeks have been a bit disrupted, been a bit busy and crazy, actually. But trying to keep up with what's going on. But, we try and keep a little bit of what's real out there in the marketplace. So thanks for joining, folks. This morning, I thought I might chat about what's going on. What happened the other day, the race that stopped the nation, but what was on everyone's, well, property investors and property owners' thoughts and minds and lips, folks. What happened? Well, the RBA in their wisdom, absolute maniacs. Morning, Andrew. Good to see you, mate. Whacked up the cash rate. Morning, Alex. Whacked up the cash rate a couple of points, which was a real pain in the ass, let's be frank. But really, let's talk about that, even if it happens, one or two more times. From what I understand, talking to a lot smarter cats than I, it's about the Aussie dollar at the moment. The Aussie dollar, our trade and bits and pieces, trying to sort of make sure we are competitive in the world and the marketplace. But what does that really mean for us as property investors? What's going on? Is there, again, we shall probably see the beginning of some media and the sky is falling, the world's going to end, blah, 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 blah. But has that really occurred, folks? What are the facts? What are the figures out there in, what is the fact after, the lowest interest rates in recent history, probably ever in Australia, and then the fastest or the hardest interest rate rises, cash rate rises, back to a reasonable amount. Now, it's not the end of the world, folks. Seriously, 4 to 5% cash rate is the average long term. Now we're getting back to the average, and we talked about this. We all talked about it for ages. It wasn't going to last forever. And for those of us who took advantage, well done, because, many of you and myself bought properties during that time when the interest rates were low that we couldn't buy now. We couldn't buy now. Anyway, there you go. If you follow along, you've got a coach, you get what you need. But let's talk about what's going on. Let's have a little look at some facts out in the marketplace. Tell me, folks, what do you think? All right, interest rates going up a little bit. Yeah, that might be a little bit intimidating, certainly for owner-occupiers when it comes to their world and what they might need to cover each month. But for property investors, well, we've got a few other things going our way. And, let's talk about that. Let's talk about that this morning. Let's talk about what's going on. Interest rates up, but is it the end of the world? Should we be running for the hills? Should we be selling everything and then making a beeline for the exit door? The answer is a big no. Matter of fact, folks, which kind of defies a bit of logic, but, not really. It doesn't defy logic, actually. It actually makes lots of sense when you look at the actual facts in the property market. Instead of listening to the headlines and the bullshit that the media carry on with, look at the data, look at the facts, and cross-check them. Of course, there's a very famous saying, trust but verify. Okay, got some facts here. Let's see what they look like, and then we verify, folks. But here's the drill. The interest rate or the cash rate, and promptly followed by the interest rate, by the way, folks, right? Went up pretty quickly. We had an adjustment of momentum in growth as that happened, which was to be expected. And then, there was a lot of pundits, there was a lot of turkeys out there said, the property prices will correct. And, some very ill-informed people were sitting around. Put a yes in the chat if you maybe heard someone or heard of someone telling you that there were people waiting around. I'm going to wait around till the market crashes to buy a property. Tell me that. Give me a yes in the chat. Did anybody hear that over the last few years? I've heard that so many times. I'll wait around till the market crashes to buy. Let me know in the chat if you've heard that once or twice before in your travels. Yeah, a few people have, And, here's what else happened as well. Back in the beginning of COVID, there was a bit of uncertainty what's going on. Once we sort of got the lay of the land and understood the jiggery-pokery, the facts of the matter, ladies and gents, Sam said, people who are educated and understood what was going on in the property market said this. Matter of fact, you should probably be buying property. There's some things that are indicating that we should, double down on the things that are going on. The government got leery. They gave away free money. Markets moved, and we had some significant growth. Right, folks? Look at this. There's the time where we had the COVID land on us. Those who sit on fences, get splinters, and we had some growth. Some of the most significant growth in recent times, which is fantastic. Will it continue? Well, it has continued, folks. Look at this. It has continued even after the fastest 12 interest rate rises in a row and maybe one or two more. Property prices have continued to grow. And, folks, listen up. Every single person. Now, I hate to call them experts because sometimes they talk out their ass and they don't know what they're talking about. Every single person who's got an opinion that is formed with some sort of data, let's just say that, all right, is saying the same thing. Let's just listen up. I'll tell you a secret that me and Sam have been saying for years already, folks. These people, I reckon they've been watching my show. I think they've been listening to Sam's podcast. We've been talking about this for a long time. The property market in Australia the property supply chain is in all sorts. And it actually started way back here with these two wankers, turkeys. Anyway, I'm getting a bit fired up this morning. two idiots in our system of control mechanisms in Australia called APRA and ASIC decided that they would have an all-out assault on the world of lending and financial planning. 25,000 brokers and lenders left the industry. How did that make it better? ASIC, ATO, and APRA. The average price of an average Australian's financial planning doubled in value, and then you had half the people you could reach out to. Anyway, that's not what I'm talking about this morning. I'm going to talk about that one as well. These turkeys made it worse. But, you know, in the last quarter, folks, let's just check this out. In the last quarter, the median, you know, the total value of the Australian residential property prices rose $325 billion. That's not too bad, right? Australia residential real estate is the largest asset class in Australia. Dwarfs everything. Triple by 3 times, folks, by 3 times the share market. 3 times. 3 times. By 10 times the commercial real estate market in Australia. No, commercial industrial real estate market. By 10 times. And super is about half, all right? So, but the average or the average price, dwelling price rose, okay? So 25 grand in a quarter. Now, everyone thought that would have went down, right? But no, it went up. So the average property owner, on average, added value, let's say, by 25 grand. Not every property did go up 25 grand. Some went up more. Some went up way more. Some didn't go up at all. Maybe some went backwards. My point is, folks, if you're in the game, if you have a piece of real estate, you're being... I don't like to say inflation's good, but it's better for you if you own something than when you friggin' don't. I can tell you that. Sitting on the fence, getting a splinter, and inflation pushing prices, because I'm going to show you something in a minute. Hang with me. Hang with me. So property prices, the average price that people were paying for a property. That sounded like Peter picked a peck of peppers. Anyway, let's have a look at this. The average or the weekly asking price. This is SQM Research, folks. You can check out this website. I love it. It's fantastic. Look at the weekly asking price, right? You know, up. You know, since 2000 and let's put us off to the side here, so we can see. There you go. Over here, 2020 was chugging along at a reasonable rate and flew up. Right? Asking price, and that's not the sale price. The people's confidence to ask more because there's less properties in the market, right? You can always check that one. I always say check out SQM Research, folks, because I really like it. It's a leading measure in the world of property investing when it comes to what's going on, because it hasn't turned up in the data yet, but it's an indicator. Anyway, property prices went up. Let's have a look at all the forecasters. Let's have a look at the opinions, people with some data and some opinions on the future of residential real estate in Australia. All right, let's have a good sticky beak, right? NAB, they reckon up, right? They're saying, hey, property prices have got some growth, 24, 23 and 24. They're saying, okay, Brisbane, 6%. Perth, 1.2. I don't know about that. I think Perth's got a bit more in it. 5% Sydney, 6% Adelaide. Melbourne's got 5% in it. They reckon Hobart's got nothing. And this is why I say to you, double check some data. All right, double check some data. Because let's have a look. Let's have a look at the prop. I think these are the prop track boys and girls and their forecasts. So what are they saying? Forecast over here. Have a look at 2025. All up. Let's have a look at 2024. Other than Darwin, you know, Darwin and Hobart in 23. I don't know. They're saying over here, Hobart up. But look at this. Sydney, Melbourne, Brisbane, Adelaide, Darwin, Canberra, everywhere up in value, anywhere between 5 and 10%. 5 and 10% dwelling change, folks. All right. Now, if you're sitting on the fence and you haven't got a deal or you need to get another deal, what does this mean? We're going to talk about that in a second. Let's just say the average price over 2 years is going to be a 5% increase because, 24 might be a bit slower. Interest rates a little bit higher. And then at 10%, right? 2025 interest rates will abate. I thought that was going to happen in 24, but, c'est la vie, c'est la vie. Dr. Andrew Wilson, someone we respect highly. Sydney and Perth, 10%. Adelaide and Brisbane, 10%, 12%. Perth, 8%, et cetera, et cetera, et cetera. Have a look at the team here at CoreLogic and RP Data. They're talking, up, up, and up as well. Some changes and some forecasts. Okay, fantastic. Well above, many of these are well above the, here we go. These ones are well above the 10-year averages. Sydney's well above, Melbourne well above, Hobart well above, Perth probably going to kick in there. Brizzy, not yet. So these ones are different when it comes to the forecast of the 10-year average. So what does it all mean, folks? Well, first things first, let's have a little look at this. We cross-check our data from multiple data sources, and they say, hey, by and large, folks, property prices are going to go up. Why? Chuck it in the chat for me. I'll show you a couple of things in a second, but put it in the chat. What are 3 to 4 things that you already know as a informed property investor right now? You know why the pressure is coming, and a small incremental interest rate rise of 0.25 or 0.15, what will not make a difference in any way, shape, or form to property prices. It certainly has an effect on people's cash flow comfort. But why? What are a few things that you know already, folks, that are in the future that are going to undersupport that? Yep, exactly. Right. Demand, immigration, students pouring in, and repopulating our unis and our cities, which is great. And so too, internal immigration and external immigration. I get them mixed up. Lack of stock. No, there's nothing around. It's not being built, folks, and certainly not being built to the demand that's required. And what else is going on, folks? Like, there's a few things out there. Look, CBRE, very respected research group as well, property group, they are saying that they see rents in a certain number of precincts that they work in are forecasted to go up 30%, folks, from today. 30% from today for our rents. And ladies and gents, if you haven't already noticed, unless you've been living under a rock, rents have been pretty good lately. However, here we go. We'll have a look at what happened with weekly rents. Now you can dive into this website and have a look yourself. But the weekly rents skyrocketing, folks. Over here, look at this. Push, all the way up. So weekly rents going up. You're dead right, Jeff. And Jeff's got a couple of crackers there too. We've got an issue with our supply chain, right? So let's have a look at that. Rents going up everywhere. Continue to rise. Our vacancy rate, folks, lowest in history. Lowest in history. It was already the lowest before, and now it's even lower. We keep setting these things. So we've had increases in construction prices. They're not going down, ladies and gents. Okay, ladies and gents, and not a lot of builders. Okay, so our supply chain has absolutely tanked, right? So we've got arrivals, net migration up, way over and above our kind of, averages, which is interesting. Big tick in the box there. We've got a safe country. You're dead right, Jeff. And our population, jobs, and earnings all looking, let's call it positive for supporting our property prices and supporting the rental that we would charge on those ones. I don't think I had another one. I did have one more that I had there. But listen, folks, at the end of the day, our property construction industry is down 50% from our peaks, 50% down, folks, and trending downwards. And our population is up 1 million people based on, when even we were at our peak, still a shortage of property to be delivered. Build to rent is being touted around by the politician as something that is going to solve that problem. Less than 3%. Less than 3%. Even at its maximum, build to rent can only provide 3% of what's required. Okay? 3% of what's required. Crazy times. Anyway, what do you think about that? I think that, what's the takeaway? What's the takeaway, folks? The takeaway is this. Right now, if you sit on the fence when it comes to building your portfolio, then basically the pieces of the puzzle that are making things more expensive will, if you want to continue your property investment portfolio, let's say, we'll wait till interest rates go. I've had a few people say, I'll wait till interest rates go down. Well, that's fine. Perfectly fine if you could borrow now, which is the premise. If you could borrow now and you could buy yourself, let's say, something for $650, $700. I'll wait till it goes down. What do you think? Put it in the chat, folks. If you waited a year and you could buy something today for $657, if you waited a year knowing all of this is going on for the interest rates to go down a little bit, which might save you, let's say, I don't know, $100 a week in cash flow, right? What would you miss out on? So you're waiting to save $5,200. Boom. You're going to, you can go cross-check anything you like. You go check the data. So you're waiting to save $5,200, folks. You're waiting to save $5,200 from your cash flow, and you're going to miss out on $100K or more. I'm not kidding you. Like 70, 50, 60, 100K or more of capital growth. And folks, this is the other premise. That's the premise that you'll be able to buy something that you want in the future in a year's time or 2 years' time when the supply chain is even worse. I can tell you right now, folks, there are a lot of uneducated, not so confident people sitting on the sidelines, and there's some fantastic buying for now, right now, in comparison to what the future looks like. And we're pretty keen on that. We're pretty excited about that stuff. It's probably a 3 to 6 month window. And then all of that stock will be gone, and all of the new stuff's going to be priced at some higher prices, folks. It's just gonna hit the it's gonna hit the reset. Anyway, there you go. You want a bonus? You want to get a 25K bonus this year? Maybe even a 50, maybe even 100. Get in the market. And if you're already in the market, awesome. Stay in the market. Don't get out. Don't get the fearmonger of the damn media giving you a little bit of the sky's falling, folks. I know you guys. If you're sitting here, if you're listening to this, then I know you've got a plan, you've got a coach, you've got someone supporting you. But maybe if you don't, reach out. Hey, that's what we do. We help you make good decisions based on good data and your situation with our coaching team. But anyway, that's it from me. I'm rabbiting on. I'm 5 minutes over today, but hopefully it was useful. Thanks for joining me today, folks, with the Wealth Coffee Chat. You guys be good. Take care. Remember, a couple of sayings around here. This thing's a marathon, not a sprint. Takes time to build your property portfolio. I always say buy well, don't sell. But there's 1 or 2 reasons you might sell to upgrade to something that you would never sell. Anyway, there you go. All right, folks, I'm rabbiting on now. Adios. Thanks for joining me. You guys be good. Join me tomorrow for another one. If you're up for it, take care. Bye for now.